Hello everyone, I'm Marty Pospisil. Welcome to the February 2022 Real Estate Market Update. Okay, as you all know, if you're followers on our YouTube page, one of the metrics I use to track the market is the sales ratio. Basically, all the sales ratio is the absorption rate into the market on a monthly basis. So if the sales ratio is under 11%, if less than 11 out of 100 homes are selling in a month, we're in a buyer's market. There's downward pressure on pricing. If it's between 11 and 20%, we're in a balanced market, doesn't favor the buyers or the sellers. However, if the sales ratio is greater than 21%, we are in a seller's market and there is upward pressure on pricing. So let's have a look what's happening. Let's look at our market speedo video. We will zoom around and see exactly what's happening. Basically, what we have is the listing activity can't keep up with the demand, and that is causing upward pressure on the prices. We're continuing at 34% sales ratio. That's well into a seller's market in Metro Vancouver. So our heated market is continuing. So if we're looking year over year, we can see listings are down. Now, we're at a 30-year low in listings. So, and that, I'm going to show you some stats on that a little bit later. The total sales are up. So we are seeing an increase in volume of sales, and the sale price is up. So as you can see on my table, I like to break these down into different product types. For this year over year, detached house sales activity is down 16%. We are up 23% benchmark price year over year for detached houses in Metro Vancouver. And just in the last month, we've jumped up 2.2%. So we're seeing a dramatic increase in upward pressure on the pricing. Sorry, let me jump back there. Townhomes, for example, sales activity is down 23%. Benchmark price year over year up 24%, and last month the jump up in price of 2.5%, significant monthly jumps. Attached apartment condos, the activity is up year over year 10%, prices are up 14% since this time last year, and last month the prices in Metro Vancouver for condos jumped up 1.8%. So significant increase in upwards pressure. Again, if we're looking at sales ratios for each product type, if we're looking at detached houses, west side, we're at 13%. Now, very interesting. Last month we were at 17%. So we are seeing a little bit of cooling off in the west side. That's interesting because just the other night we sold a property with 8 offers, almost $400,000 above asking. So there are hot spots and hot product within the west side, but overall we're at 13%. You can see the breakdown by neighborhood and the breakdown by price range. Rule of thumb, the lower the price range, obviously the higher the activity, that buyer's pyramid. So detached houses 13%. In a balanced market, just above a buyer's market. So really interesting stat from the previous 4 weeks. Condos and townhomes, west side, still in a very strong seller's market at 34%, and that is down from last month's 43%. Condos and townhomes downtown, we're at 30%, still strong seller's market, which starts at 21%, but we are down from 33% last month. Really interesting. You're seeing the sales ratios drop slightly. Detached houses, Vancouver East Side, we are at 19%. We have just dropped down in the East Side for houses into a balanced market. That's down from 32% last month. So significant activity drop we're seeing in a lot of product. Condos, townhomes on the East Side still very heated at 53%. But down from 67% last month. So our condos, townhomes in the east side, the hottest out of all of the 4 that I've just mentioned, but still down from last month. And if we look at what's happening in the burbs, overall it's quite interesting. All these red arrows in all the neighborhoods in Greater Vancouver, all the sales ratios are down except for one in Port Moody, the outlier. So we're seeing a very general trend of that barometer of the market activity dropping everywhere. And if we look at attached, that was detached. If we look at attached, same story. All the attached product in all of the Greater Vancouver area has dropped except for Pitt Meadows, and significant drops throughout. So very, very interesting stat to look at. If we forecast, remember there are three market drivers: consumer confidence. Buyers are strongly motivated, but they're getting a little bit tired of the multiple offers and current stressful market, but multiple offers and fierce competition does continue. The cost of borrowing. So this is an interesting one that is changing. We've seen the announcements. March 2nd, the overnight rate is expected to increase, and then of course the lending rates will follow suit. Going to show you a little bit more on this later. And the inventory levels. Inventory is the lowest it's been in 30 years. Listings are beginning to come in. Our phones are starting to ring. We've got more and more listing appointments every week, so we can see that starting to build. That's going to continue in February, and then in March we're going to see a dramatic increase in inventory if we follow the annual cycle. So the levels increasing, cost of borrowing increasing, consumer confidence is waning a little bit. So we'll watch those. Let's look closer at consumer confidence. Rental rates are dipping a little bit from last month, only by a few dollars. So that's interesting to watch. And the employment, you can see we are well past the pre-pandemic levels in British Columbia and also in Canada. So employment is up. That's all good news. Unemployment rate way down for BC. We're at 5.3%, and for Canada at 5.9%. We are now at the pre-pandemic unemployment rate. So that's also good news. Canada immigration, that's good news. They are going to be increasing the number of immigrants coming to Canada, and the goal for 2022 is 411,000 immigrants coming into the country. Many of them will be purchasing homes, so that's also good news for the market. Cost of borrowing, this is where the bad news starts. That cost of borrowing is going to increase. Why? Our GDP is negatively related to inflation. The GDP is growing, and the consumer price index has increased dramatically. So we're seeing higher prices for food, vehicles, homes, and other things. That's because of the supply chain issues. And what happens as the prices increase, we get an increase in inflation. Now, this is an interesting graph I found. Look at the inflation in the US, 7%, ridiculous. Our inflation for Canada is at a 30-year high. We're getting a lot of 30-year records here of 4.8%. They want to keep it below 2%. We're at 4.8%. There's unrealistic pressure on the government to raise the interest rates to keep inflation in check. They have to, and that's why that overnight rate is going to change on March 2nd. So prices have increased because of the disruption on supply and the government stimulus programs. There's a lot of money floating around. The supply chain issues, that's why prices are going up. That's why inflation's out of control, and the government has to control that by bringing our rates down. So kind of interesting to see how we're comparing to the rest of the country. Look at Japan, they're doing something different. Mortgage rate forecasts, as I mentioned earlier, we're looking at rates probably doubling over the next 2 years. It's already starting. And also in the US, the Feds warned that the faster rate rises are needed to tame soaring inflation, okay? Same story, it's happening south of the border, and it's happening here as well. Inventory levels, we are seeing inventory, again, another 30-year record, at 30-year lows across the board. Why is that important? Because you can see here, this is a graph of inventory, and when inventory is high, prices are down. This is the Housing Price Index Composite. When we peak in inventory, we trough in prices. when inventory drops down, prices go up. So there's an inversely proportional relationship between inventory and prices. And this was a graph I showed you last month as well. It's quite interesting. I wanted to show it to you one more time. As we saw this year, what happened, the green line being sellers, as there's less sellers or less inventory, and there are more buyers, the ratio of buyers to inventory impacts pricing. So as inventory drops, demand is increasing, prices shoot up. That's what we've seen over the last few months. So that's really interesting, buyers versus sellers. Inventory is dropping in Metro Vancouver, and houses, townhomes across the board. We're at a historically highest benchmark price for the housing price index in Vancouver at 1.91 million. If we look at the average price, we are at the highest average price in history, and that is no surprise. Prices have never been higher in Vancouver, and if we look at the historic average price graph, again, highest average price in history, detached houses, Greater Vancouver, $2,279,798 since the beginning of time, which in Vancouver started in 1977 when we tracked this data. Highest average price in history. We're making history. Okay, let's look at the forecast. Here's my graph that I talk about. And I look at the housing price index for Vancouver West, and as you can see, the prices have really started to shoot up since September. They can continue going up, as is happening from that transitionary phase in fall, or they can continue the same, or prices can drop. And here are the determining factors that will determine what happens. There hasn't been any tax changes yet. There hasn't been any dramatic interest rate increases, and the inventory levels have stayed low. So guess what? The actual housing price index graph is paralleling my green forecast of prices continuing. Now, if the rates go up a bit and the inventory stays the same, the prices could stay the same and not increase any longer. However, negative factors are abound. If there's a capital tax change, if there's a 2-year ban on foreign home buyers, if they ban blind bidding provincially, if the pandemic persists, maybe another wave, and if there's a cooling off period introduced in British Columbia, and the interest rates increase and consumer confidence begins to fall in real estate, we may have a mass listing surge, and we could see this happening. These are the factors we're watching. So far, we're continuing up. When more of these start coming into play, then we'll start to see a change. And it's really interesting that we've seen the sales ratio already dip in pretty well the majority of product categories for the last month's data. Okay, so that is my market update for February 2022. I'm going to get back out there in the drizzling rain. We're doing a live stream this afternoon. But if you have any questions, I love getting questions from you guys. Feel free to email me, follow us on Facebook, or like us on Facebook, subscribe to us on YouTube. Got to get those right. Thank you very much for watching. I'm Marty Pospisil with Pospisil Realty Group. Vancouver, have a great day.